Okay, welcome everyone to our National Infrastructure Bank addressing the federal budget crisis. My name is Randy Voller. I did my time as mayor in my community, and I also in real estate, did development, planning, construction. So I kind of have a foot in the private and public, and I really believe that this idea that you guys have worked on for so many years is the way forward. We have some incredible speakers tonight, and we're going to get to it as we're trying to move from our policy to promulgation. And we're going to start with Alfecca, who's the former senior economist of International Monetary Fund. Alfecca, if you will start us off tonight, that'd be wonderful.
Thank you very much to everyone who's on this call. I see some new names here and some old timers. Welcome back, welcome back. This evening, we're going to talk about the budget crisis. And of course, you know, I'm a macroeconomist, so that's right up my alley. What I'm going to do is give you a little rundown on where we are on the economy, short. And then I'm going to say really quickly sort of how this NIB bank works for those people who are new on the call. But if I travel like at a New York minute describing it and your question marks go off, don't worry. It takes everybody a little bit of a pass 2 or 3 times to figure out how this bank works as a bank. There are some great instructional videos on our webpage about how the NIB works. If you want to learn a little bit more, or if you want to have a special Zoom call with you and a group of your friends, just call up Angela and we could set a date and go over all of this for you. So let's start with where we are on the economy. It's a little worrisome. Can everybody see the screen? I hope. Randy, can you see it okay?
Yes.
Yes, I can
Okay,
see it fine.
super. So we've been looking for the last maybe 2 years for a buildup of a possible recession. We thought we would go into a recession because the Federal Reserve was tightening monetary policy to fight inflation. And when they do that, every time they have done that in the past, it has caused a recession. This time, however, in 2023 and 2024, it did not cause a recession. And probably the reason was because people kept on spending and they had the means to spend because the federal budget was running a deficit and spending more than it was taking in revenue, and that gave people the liquidity to spend more. So last year, for example, the economy grew by 2.8%. That was pretty good. It was comfortably above the 15-year average, and unemployment has been low. However, with this month's indicators, economic indicators, we see a lot of macro indicators are at their turning point. For one thing, there's a survey of purchasing managers index and a survey of how much output they're putting out at their companies for goods or services. And in February, that fell to a 17-month low. So that's an S&P global purchasing. That's a S&P global indicator. So that's down. In addition, consumer sentiment in the United States really swooned. You can see it right here in this picture, has gone down. And when consumer sentiment goes down because consumers are worried about inflation or, a possible recession, that means that they hold back on their spending. And keep in mind, it was spending that kept the economy going. So that's a very big concern. Inflation also ticked up a little bit to 3% in January. And now inflation expectations have risen to the 6% range. That is a survey of where people expect inflation to go. And you can see now that it's popped up and we're now at the 6% range. And unemployment could rise as a result of all the layoffs by government and by vendors and by businesses whose businesses have been impacted by things like tariffs or whatever. So for the first time, just yesterday or the day before, Bloomberg has flashed a recession flag, saying that these things are all turning, and this looks like it could be, our economy could be in for a recession. So that's the economy overall. Then there's the financial sector, led off by the stock market, which has had 4 consecutive losses, 4 days of consecutive losses through last week and into this week. So the stock market lost all of its gains since Trump's election, and it worsened last week on this new economic news that I just described to you. You can see what the stock market looked like for at least for 3 of those days. That has a lot of carry-on effects. Then the 10-year Treasury yields rose because the government kept dumping new debt onto the market. So to absorb that debt, the buyers are seeking higher interest rates on those loans. But then it kind of fell back a little bit as investors switched out of stocks and into bonds. So it gyrates up and down. And then meanwhile, banks are seriously undercapitalized. This has been commented on by Wall Street on Parade, by other analysts who said that really the Fed's chairman, Jerome Powell, bought the line by big banks that it would really hurt their business if they had to capitalize more, that is, take more of their hard-earned earnings and then put them back, invest it back into the bank. So they're undercapitalized, and that means if we have a recession, they're less prepared for it. Furthermore, they'll be weakened by defaults on loans from commercial real estate, which were in big trouble last year. This year, it looks like banks are just rolling it over, putting good money after bad. Also, private equity-backed firms are losing money and defaulting. And then because of the stock market losses, there's been big margin lending losses for traders that bet on the stock market using borrowed money. So those are all serious areas for concern on the economy. But the real big area of concern is the federal budget, of course. We are in a budget crisis. Shut down as possible, as I'll explain. The big problem with the budget is our federal debt is unsustainable. Currently, the debt sits at around coming up on $37 trillion. That's 110% of our GDP. It's expected to rise by an additional $2 trillion for every year for the next 10 years, according to the Congressional Budget Office. Interest on the debt is now higher than defense spending. The debt will grow at existing policies up till $74 trillion within 10 years. All this new debt coming onto the market is raising long-term interest rates, as I pointed out. That slows growth, and it worsens debt servicing for the federal budget. And many state budgets are also running deficits, and they're reducing lots of expenditures, including infrastructure spending.
So, Alfecca, we're going to have to just stop right there. We're going to have to come right back to us so we can, because we have a lot of speakers, and I know you have a lot of information. So,
all right,
we can bring Ellen Brown on so we can keep our speakers going. Then we will circle back.
Okay.
And folks will probably have questions because Alfecca has an awful lot more to say and amazing information. So, Ellen.
Okay.
Ellen Brown is author and founder of Public Banking Institute from LA. Ellen, I've read your book, The Web of Debt, and it's a pretty amazing piece of work.
Oh, great. Thank you. Okay. Get my PowerPoint up. Okay. So I have to go through this fast too, I guess, but for most of the 19th and 20th centuries, the US led the world in infrastructure and development. In fact, it was a founding principle of the Constitution. You had your Federalists versus your Anti-Federalists. The Federalists wanted a national government, the Anti-Federalists wanted just the states, but Washington was particularly big on, he said, no, we need a federal government so we can have infrastructure. We need to have roads and bridges and canals and trade among the states. And now, of course, besides those things, we've added railroad in the 19th century, and now we've got air travel and electricity and internet. However, infrastructure investment today is woefully lacking. It fell off in the 1970s when available resources were sucked into the Vietnam War. This is still the situation today, with military expenditures estimated at nearly $1 trillion in fiscal year 2024, versus infrastructure, which was only at 126 billion. So 40 times as much for the military as for infrastructure. And Congress has now hit the debt ceiling, as Alfecca pointed out, so we can't expect much in the way of infrastructure spending in the next budget. But we can escape the debt trap basically the same way that Alexander Hamilton got us out of it, by growing our way out of it with infrastructure and development. By the end of the Revolutionary War, the colonies turned states were $44 million in debt. Treasury Secretary Hamilton solved the problem with debt for equity swaps. So he basically turned debt into capital. State debt was accepted in partial payment for stock in the first US bank, paying a 6% dividend. The bank leveraged this capital into credit, issued as the first US currency. Loans were based on the fractional reserve model. Hamilton wrote, "It is a well-established fact that banks in good credit can circulate a far greater sum than the actual quantum of their capital in gold and silver." In other words, banks just made issued deposit just made bank credit on their books and extended it. At that time, they actually printed banknotes. And today they do it just by writing it into your account, but it's actually banks that create most of our money supply even today. The primary function of the first US bank was to issue credit to the government and private interests for internal improvements and other economic development, according to Hamilton's system of public credit. It was thus a national infrastructure and development bank, and so was the second US bank. Achievements included building the Erie Canal. After Jackson shut the second U.S. bank down, Lincoln avoided a crippling civil war debt by returning to the American system of government-issued money and credit. His government issued paper greenbacks, actually to the extent of doubling the money supply. It also founded the national bank system. National banks had to capitalize their banknotes in part with government debt. So again, you're turning debt into capital. These new monies, and that's what the National Infrastructure Bank that we're proposing here would do as well. These new monies funded the Civil War effort and rapid economic development, including construction of the Transcontinental Railroad. The money supply was doubled, but did not trigger price inflation after the war. There's always some price inflation during wartime because of shortages. Why was that? Why was there no inflation later? Because supply and demand went up together. So if you have too many widgets or too much money chasing too few widgets, you're going to drive up the price. But if you have a lot of money chasing a lot of widgets, the price stays stable. The Hamiltonian model was used again in the Great Depression when U.S. banks were bankrupt. Under Secretary of Commerce Jesse Jones, the Reconstruction Finance Corporation, founded by President Hoover, was repurposed to fund development. They started with a modest $500 million in capitalization, issued bonds, lent or invested over $50 billion from over the next 25 years, funded the New Deal in World War II, rebuilt a depressed economy, and for all that actually returned a net profit to the government. Post-war prosperity created a U.S. middle class that was the envy of the world, but no more. In the 1960s, U.S. infrastructure spending hit about 3% of GDP. But after the 1970s, investment fell. It was only 1.4% of GDP by the 2000s. By the 2010s, the US ranked only 13th globally in infrastructure quality, with the American Society of Civil Engineers often grading it a C or worse. China now spends 10 times more than the US relative to its GDP. So today, China is the stellar infrastructure model. It went from one of the poorest countries in the world to global economic powerhouse in 4 decades. Where does it get the money? Partly, the central bank issues it outright in yuan, the local currency, just as Lincoln's government did when it doubled the money supply with greenbacks. Oops, typo. But China has gone farther. Its money supply has increased by a factor of 30, actually 3,000% just in this century, and more than that before that. The US money supply increased by only a factor of 5 or 500% in the same period. So only 1/6 of the Chinese increase, another typo in here. Massive inflation of the money supply, and yet China's price inflation has remained low. Why? Again, because its GDP shot up at the same rate as the money supply. Supply and demand rose together, and so the prices remained in balance. China has a development bank, the China Development Bank, which is the world's largest development bank by lending volume, with assets estimated at $2.5 to $3 trillion in US dollars. The Chinese government owns 80% of the nation's banking assets, including China Development Bank and two other massive policy banks, which are responsible for implementing the government's development goals. Government banks fund infrastructure with credit, and the fees generated by the infrastructure repay the loan. And that's the same model we're proposing here. So that is the solution to a federal debt crisis: increase productivity. Like in the Great Depression, crises are when politicians are open to major changes. We could rebuild the country, restore our middle class, and create a 21st century renaissance by passing HR 4052, the National Infrastructure Bank Act. Thank you very much.
Thank you, Ellen. That was awesome. So our next speaker is Representative Sena from Massachusetts House, is also a sponsor for resolution for the National Infrastructure Bank. Representative, if you will jump on.
Thank you, everyone. Thank you for the time, for being very punctual. Hello, everyone. Thank you for the opportunity for me to say a few words tonight, and for the invitation. I want to thank Stu Rosenblatt and the team with the National Infrastructure Bank Coalition for organizing tonight's meeting. My name is Danillo Sena, and I'm a state representative for the 37th Middlesex District in Massachusetts. I am also a proud sponsor of the House Docket 4172, a resolution urging Congress to pass legislation establishing a National Infrastructure Bank. I filed this resolution because our infrastructure needs help across Massachusetts. Our roads and bridges are failing. Our commuter rails are outdated and infrequent. Our train stations are in disrepair, and it's clear that something must be done. I support the creation of a National Infrastructure Bank because it will build a path to improving our communities while improving the economy. The bank will create millions of high-paying jobs while helping build our future. Since I introduced the bill in Massachusetts in the House of Representatives in January, we have already received bipartisan support for the bill. While we are still working on gaining more co-sponsors, it is clear that the need for this bank is bipartisan. The time is now to create a National Infrastructure Bank. We need to build up our infrastructure, support our communities, and prepare for the future. I want to thank everyone for the time for me to speak here tonight, and I look forward in working together.
Thank you very much, Representative. We really appreciate your support. Our next speaker is going to be Representative Jed Davis from Illinois House. Representative Davis.
Yeah, good morning or good evening. I've lost track of time.
Sometimes it's like that on Zoom calls.
I've been stuck in the Stratton for a long time, which is where our offices are here in Illinois, but I don't really have anything prepared. I'm here to kind of be a fly on the wall. Very grateful for the opportunity. Very familiar with struggling budgets. That seems to be a pretty common theme here in Illinois, and trying to overcome continual deficits with failing infrastructure. We do a pretty good job at infrastructure, but we definitely have a significant issue throughout the state, and it's near and dear to my heart because I'm actually a civil engineer by degree. So I'm all about putting money back into infrastructure because that's my upbringing and what put food on my table for year after year after year. And also the roots to Lincoln with the whole National Infrastructure Bank, I think is pretty historic, and I love history. So that connection there to Illinois is pretty awesome. So I'm just saying thank you for the opportunity to learn, and happy to be a part of this. I think our resolution is actually in the Senate, so I'm unable to get my hands on it quite yet through a sponsorship, but if it gets out of there, I can promise you I'm more than happy to pick it up in the House.
Well, we really appreciate the work you're doing. My father was an economist and an imaginary engineer. He ran industrial engineering out of Chicago. So I always appreciate real engineers. So our next speaker is going to be Senator David Koehler for Illinois Senate. Senator, if you would jump on.
Dave Koehler,
Dave Koehler.
represent the 46th district, which is Peoria and Bloomington, and want to say hi to my colleague, Representative Davis in the House. Yes, I'm the sponsor of the Senate resolution. I thought that Harry Benton had one in the House, so you might check with Harry, Representative Davis. I won't repeat what the two representatives have already said. It makes a lot of sense. Just to be able to have a funding source for infrastructure that is not tied to tax dollars is a big deal, because we struggle with that all the time. Now in Illinois, we're fortunate. We passed a pretty large infrastructure bill back in 2019 of $45 billion. We're still using that and bonding different projects. It's about a 10-year phase in which we anticipated. But looking at the future, we're not able to address all of our infrastructure needs. The one thing I will say about infrastructure is that it's just a natural bipartisan effort. We always have good bipartisan support when we have an infrastructure bill, because there aren't Republican roads or Democrat roads, they're just roads. And we have schools and we have different facilities that we have to that we're really responsible for building and maintaining. So I've been involved with this for a couple of years now. I appreciate all the efforts of the whole team here. And I know you're reaching out to a number of legislators in Illinois, and that's just going to help us. So I lend my support, and I'm always available whenever you need help. Thanks.
I really appreciate your comments. In my 4 terms as mayor, people said the same thing you said. There are no Republican or Democratic infrastructure. It's just the water we supply, the bottles we fill. So thank you very much, Senator. We're going to call on Assemblyman Christian Barranco from New Jersey. Are you on, Assemblyman?
Yes, I am. I can't get this video going, but I can definitely speak with you if you can hear me.
I can hear you. We can hear you.
Great. So I had a meeting with Alfeca. First of all, thank you for the opportunity to speak here. This is a very important issue. I happen to be an electrician here in New Jersey. I've been in the state assembly for 3 years now, and we've done quite a few electrical infrastructure projects here in New Jersey through Energy Strong, and just really transmission hardening and all kinds of other system upgrades to our electrical infrastructure. And I just wanted to take the time to share with you a success story here in New Jersey and some of the things that we're facing in New Jersey that I'm sure other folks are seeing in their respective states. We have an iBank in New Jersey. We have an infrastructure bank in New Jersey. New Jersey has, as you can imagine, some of the oldest infrastructure in the United States. It was the first industrialized state in the nation. We have water, electric, and road infrastructure that is very, very old. The iBank here in New Jersey has served us incredibly well, especially on the water infrastructure side of things. As you can imagine, New Jersey has been populated for a very, very long time as far as the United States goes. And our water infrastructure has reached, in many cases, the end of its useful life. And we're presently in a very active state of upgrading water treatment, wastewater treatment plants all over the state of New Jersey. And the iBank has done a brilliant job in providing the funding, not only providing the funding, but providing the awareness in a way for these projects to get the attention that they deserve. We do have road infrastructure right now in New Jersey is terribly suffering. I don't know if you guys have heard, but the Interstate 80 is closed in my district because of terrible sinkholes and mines that are finally making themselves evident to the motorists. I-80 is a crucial national highway that is now closed, and we're trying to get that done as soon as possible. I happen to also be a member of the Assembly Transportation Committee, so we have to answer to the public for those things, and it's not easy. Infrastructure is one of those things that, in many ways, infrastructure upgrades and fixes can be intractable because many times infrastructure is interstate, goes from states to state, and states can only do so much with the budgets that they have, and many times they need the federal government to help come in and provide funding for some of the larger things that we need to handle. And especially in New Jersey, we have a lot of stuff that really needs our attention. We have energy master plans that are happening throughout certain states like Illinois and California, New Jersey, Massachusetts, where there's this big push for electrification. It's just something that is not going to occur without massive infrastructure spending. I think my conversation with Alfecca was probably the best one. She's very knowledgeable about these sorts of things. And I have urged one of my congressmen here in New Jersey to jump on board and help with this stuff. I'm obviously a state legislator, so I have no voting power in Washington, nor will I ever, because I'm not going to Washington. I'm a Jersey guy. I'm staying here. But I would love the opportunity. Let me say, I enjoy the opportunity to be able to share my background in the electrical side and how infrastructure is brutally necessary throughout every state. And I really do commend you and others who are trying to make this effort, bring awareness and bring this effort to the forefront. So I'm just happy to be here.
Thank you for getting on the call. We're really going to lean on you for moving this forward. I saw that you were with IBEW. I actually work with them quite a bit in North Carolina, so it's a great union.
Thank you.
We're going to move on and call on, I think it's former Senator Josh Newman.
You don't have to rub it in, Randolph, but yes.
I'm a former mayor, so we get to keep the honorary in front of our name.
Maybe. They say honor the honorable in a different tone, right? Ed, when you're a former.
Exactly.
So thank you. And thank you to Stu Rosenblatt for the invitation and for Alfecca for all the work that you do. But let me just add on to Mr. Barranca's comments. Mention California. California is one of the states that does have a master plan. We also lack sufficient resources, even though we as a state do have an iBank, and we've had one since 1994. But the magnitude of the investments necessary to maintain our infrastructure while building out zero emissions infrastructure, no small thing. And I'm really grateful for the work that this coalition is doing in support of the concept of a national infrastructure bank. That is not only necessary, but it's a better idea than many I've heard recently. And so I'm glad to be a part of it. I'm a past member as the Senate's representative of the California Transportation Commission, also to the School Allocations Board, and as aware as anybody on the necessary investments we need to make and the lack of prioritization that's happened, especially at the federal level over the last several years. And so as Congress is debating the continuing resolution and it's the Trump administration looking at a possible next tax cut, we need to refocus not only on the need, but also on concepts and approaches that actually leverage existing and future funds to make the kinds of investments necessary. So I'll be brief, but again, thank you. I'm glad to be a voice in this, and I'm glad to see if I can't rally some of my colleagues in the legislature and in our local congressional delegation as well.
Well, we really appreciate your support. I got to look at your district on my grandfather's side, my mom's side. They're fifth generation Angelinos. I got to figure out if you represented them.
I'm just south of there. Orange County, and I guess I can say proudly now, I got kicked out once for making a hard vote on infrastructure, raising California's gas tax, and so that was hard. This I think is easy.
This is easy.
Yeah,
I like the fact that you said that, because we're not elected to serve forever. We're elected to make the tough choices. I'm going to move on to our next speaker, and do we have Miss Taylor on? Monica Taylor from Pennsylvania County Council in Delaware County. Monica, good to see you again.
Hello, It's great to see you all. Thank you everyone for having me here today. And I want to thank Stuart Roseblatt and the team for organizing today's meeting. This is just such an important conversation. It was great to hear from the other speakers. My name is Dr. Monica Taylor. I am the chair or the president of Delaware County Council, which is one of the collar counties in suburbs outside of Philadelphia. Our county is in the southeast region of Pennsylvania. We have about 575,000 residents here. And we have aging infrastructure as a county, and we just recently went through an assessment to figure out what is our 10-year plan in terms of our public works, our infrastructure, and how do we prioritize. And we have buildings and parks and trails and bridges that we need significant infrastructure investments. And we are trying to make that plan for over the next 10 to 15 years and build that out. But something like a national infrastructure bank would really allow us to move these projects forward, while also improving and having an impact on our economy, increasing job opportunities in the region, and allowing us to move those projects forward in a quick, efficient manner. So something like this would really have an impact here on the ground level at the county. Just seeing what we are going through right now in terms of aging infrastructure. And I know so many others have mentioned that in regions all across the country. So I'm going to make it short, but this is just, I'm glad to be a voice here in the space. Thank you again for having me. And, I commend your efforts to continue to try to move this project forward. So thank you.
We really appreciate you getting on the call because it's going to take all of us singing like a choir to get this going forward. So Alfeka, I promised to come back to you, and we've moved through this. So let's get back to where you were and finish up the presentation, and then I think we would get to Q&A probably.
Okay, great. Well, I just loved hearing all the comments from all these great folks that really want to help push this infrastructure policy forward. And the lesson that we learned from the budget crisis is there isn't any money. There's no money in the federal budget to finance infrastructure. I mean, Ellen did a great job with the numbers, showing how, really our infrastructure spending in the federal budget has just gotten cut out because of other things. And now that we have this unsustainable debt picture, we have a double problem. It's going to, spiral downward in an even worse fashion. So in contrasting to what's going on with the budget, we have an increase in the infrastructure financing gap. Since we have one member here who's a member of the ASCE, it's worth noting that the ASCE will come out with a new report card in March, which will show that the unfinanced gap for infrastructure has continued to grow. It's grown by another 30% in 4 years, from 2.6 trillion to 3.4 trillion. And that was despite having the bipartisan infrastructure law in place. So the longer we wait on fixing our infrastructure and not financing it right away or in a timely fashion, the bigger the problem becomes. So we really have to take immediate action. We can't ask states to do it because they also have their own budget problems. So the only solution here is an off-budget, permanent national infrastructure bank that provides productive investments to grow the economy at least 2 times faster than it's currently growing. And to solve our debt problem and to prove how it worked in the past, here is our debt over the last 100 or so years. And what you can see is that it is forecast with this kind of spending to double in size as a percent of GDP. That's just not sustainable. But look at this. If you can grow the economy faster, then this would be the trajectory right here. The same as what happened after World War II, when our debt went from 100% of GDP down to 25% of GDP in just 30 years. None of the debt was repaid. It's just that we grew the economy faster because we had these great investments in infrastructure, which is the best kind of investment you can make. So we had a bill in Congress that expired with the end of the 117th Congress in December. It had 48 co-sponsors. All of you helped to bring on these members of Congress to sign onto the bill. We need to reintroduce this bill. We need to get bipartisan, and we need to double down in every single state and get our representatives to sign on to this important bill. Why? Because it will it's large enough to solve their infrastructure needs in their district, and it will create great paying jobs, and it will fight inflation, including building affordable housing. All of those things might be cut back in the current budget, but this bank can come alongside of budgets and finance everything that we need. So I'll stop there.
Okay. So at this point, I think we can take some Q&A unless there's something else we're supposed to do. But I think, are there any questions for Alphecca or for Ellen? Recognize or anyone want to speak? Jay?
Hold on just one second. Hello, my name is Jay, and I work in urban planning, and I just have a couple concerns because as a student of urban planning history, I love this idea. I think it's great. I think we need to, think bold again. It comes up every day in my line of work. We don't have enough money to do what the community wants us to do. We don't have enough money to really serve our constituents' needs. But the one thing I'm a little nervous about is the vast majority of the funding going towards highway expansion that can then no longer be maintained in the long run. I'm just worried that, like all these needs that need to be met, and the vast majority is going to just continue the trend that we see in a lot of states, which is this continuing nonstop, needless highway expansion. So how can we kind of avoid the worst of that, I guess is my question.
Alphecca, do you want to take that?
Okay, sure. So the beauty of this bank is we cover all the sectors that are needed. We will build new roads and improve them. Especially we need to build and rebuild bridges that are connected to the roads because those are in terrible shape. We spent more on roads than on bridges. And if you see a 60-minute piece where they built, hammocks underneath bridges to catch the stuff that's falling down onto the road underneath. I mean, that's just not tenable. I mean, we need to have safe bridges, but we also need much more rail in our transportation mix. We have reached the end of our ability to add on lanes onto highways. I mean, we have all of our interstates that are all clogged up with traffic. We waste billions of dollars with people sitting stuck in traffic, even on toll roads, all along the East Coast, the West Coast. So we need to go the way the Europeans have gone and get much more rail. And that is, subways, passenger rail, high-speed rail. We need, and we can use all those things to even move express freight and other things to unclog roads and unclog airports. So solving traffic congestion with more rail in the mix is a big objective for the bank. We want states and local governments to be in better shape to maintain if they're going to take a mortgage, it's like taking a mortgage on a house. You don't let it just kind of fall apart. You keep making investments in your house. We need to do that because it extends. If you can just, do whatever treatment you do on the road top surfaces, it extends the life of the road.
So Alphecca,
To take a loan for that, then you should have the maintenance dollars in place to do that. So it's something we look at.
Alphecca, it'd be helpful if you'd put up the slides and what the NIB will finance so people can see that.
Okay.
Ellen, would you like to address the question?
Yep. So within this transportation, we have lots of rail infrastructure, and then we have this whole big $1.1 trillion dollop of money just for high-speed rail. Yeah.
So Ellen, if you want to, Ellen, you can unmute and address the question. If not, then I will call on Joe.
Yeah, sorry, I have to go. I have another meeting now. So.
Well, that is addressing
Sorry.
You're out the door. Well, thank you very much for taking part in the meeting, and we look forward to seeing you again.
Okay, great.
Okay, Joe, quick question.
Hi, more an observation,
Okay.
but number one, it's a great evening, great presentations, great to hear from the politicians as well. The other observation is that Alphecca and Ellen will be happy to know that Nobel Prize winner Simon Johnson has been singing from the same prayer book the last few years. In his on YouTube, you can see his presentations about 30 minutes on jumpstarting America, and he says almost the identical things that you both have said tonight. He points out that the period between 1939 and the 1970s was an economic miracle, following exactly what you're proposing tonight, and that we have to get back to that. So I highly recommend people try to find that. As well, if those, I noticed in those charts that Alfeca showed that the debt to GDP started to rise dramatically when Mr. Reagan and his trickle-down economics came into being, with much higher real interest rates and much less investment in the economy. It was more about financialization. So it seems that history proves what you both have been saying, not just the Reconstruction Finance Corporation, but the total trend. And I hope people start listening.
Thank you very much for your observation, Joe. I tend to subscribe to the Mark Twain theory. As a historian, history may not repeat itself, but it sure rhymes. I'm going to go ask Jim Birch. Did you have your hand up or want to say something?
Yes,
Jim
I
Birch?
do.
There you are.
I have a question. I hope you can dissuade me of my perception of what's going on. I used to be pretty involved in politics when I lived in the DC region, but for the last 3 years, I've been down here in the fringe of things in southwestern Florida, and it's a different atmosphere, and I can't quite get the perspective. But our congressman is Byron Donalds, who is a Republican, and all those 48 co-sponsors of the legislation in the House of Representatives in the United States were Democrats. That isn't going to get anywhere for at least the next 4 years. Isn't going to get anywhere. So we have to have Republicans in this thing. And I thought if I could get Byron Donalds, that he would, he's an economist. He's a smart man, although he doesn't show it, but he's a smart man. And if he could get the last person that walks in front of Trump, he's like a duck. He'll follow the last person who walked in front of him. So if Byron Donalds could get there, he could follow him. And this would be a feather in their cap. They wouldn't know what they're doing, but it'd be a feather in their cap. So, but I can't get to him. And now he's running for governor. So I think he's out of the picture. He doesn't want to do anything where he's stepping anybody's toes. So do we have any hopes that there's anybody in the Republican Party who will see this as a nonpartisan issue and something that would benefit America? Who cares who gets the credit? Is anybody going to move on that?
Can I comment on that if I may?
Who is speaking?
This is
Andrew?
Andy Winnick, yes.
Andy?
Yeah. Let me make a couple quick comments. Infrastructure has always in this country been a bipartisan issue. You know, Hamilton was not, and Washington worked together. This was not a bipartisan issue. Most people think of the National Reconstruction Bank that FDR used as a democratic institution, but it was actually created by Hoover, by a Republican. The point is that the business community, the entire country needs infrastructure. The last major infrastructure project we had was the interstate highways system. That was under Eisenhower. So there's no reason to be thinking that somehow infrastructure is labeled democratic. Infrastructure is not a partisan issue. Infrastructure is a requirement. We don't have affordable housing, and this is the only way we're going to get it. Our electric grid is collapsing and is incapable of carrying the electricity we need for what's coming in the future. That's not a partisan issue. The question of growing food and getting water to where it needs to be is a need that the entire country has. That's not a partisan issue. So I can go on and on. The point is that thinking of this as a democratic thing is simply a wrong mindset. This is a necessity for the well-being of the American economy, and it's also a question of the job market. The only way we're going to really expand the job market is really with the infrastructure project. That's where you get the jobs on two levels. One, it's the jobs that you get building the materials, the steel for the rails and the beams and everything else you're going to need. And then secondly, the level of labor for actually installing all of this, for building the roads and building the houses and all the rest of it. And that's how we can double the growth rate of the economy, and that's critical. And the last thing I'll mention is, and this is something that Ellen touched upon, is that neither we nor any other country on planet Earth has ever paid off its debt. That countries don't pay off national debts. They simply keep track of the debt as a percentage of GDP. When we came out of World War II, the national debt was 125% of GDP. 10 years later, it was about, I don't know, 25, 30%. We didn't pay off one penny of the debt. What we did was grow the economy much faster than the debt grew. And that's what we can do again. And that's the only way we're going to get reorganize the American economy, is by growing the economy faster in ways that are responsible environmentally and humanly. And we can do that. And that requires a national infrastructure bank. And by the way, if you've ever been to Europe, you'll see that there's high-speed rail across the whole continent. What most people don't know is how did they build it? How did they pay for all that high-speed rail? The European Union has an infrastructure bank. Every country that joins the union has to join the infrastructure bank. And they also have to have an infrastructure bank of their own. And every one of those trains was financed 50-50 between the infrastructure bank of the EU and the infrastructure bank of the country the train was in. This is a tested model. Chinese do the same. Japanese have done the same.
Thank you very much, Andy.
Yeah, I'll stop.
If I'd only known that I could have lost weight by just getting bigger and bigger, the percentage anyway. I'm going to move on to Senator Koehler. Are you still here? David, you spoke earlier. I think you might want to weigh in.
Yeah.
You just weigh in real quick.
We have, there's been discussions with Congressman Darren LaHood's office, and Darren is a Republican. He's not my congressman, but he's has parts of Peoria, and I think it's he might be able to help us create more of a bipartisan nature to this legislation. It is important that we have it be bipartisan. There's no doubt about that. So we have to keep working, and I served with Darren in the Illinois Senate. He was there for a short period of time. I've known him for a long time. I know his dad very well. Ray LaHood was former U.S. Transportation Secretary. So I know this is something that's near and dear to his heart.
Thank you very much, Senator. Jim, one quick comment for you. I do know that when I got Wiley Nickel from North Carolina to commit, it was when he was going out of Congress, and he's going to be running for something again, probably U.S. Senator. So you probably have a good shot at Byron if we can just get him on the phone, because, he's not going to be committed. He's coming out of the House, but she'll see. I think Nelson Betancourt has been waiting, and then Walt McRae. Nelson, unmute yourself.
Okay, for Alfeca. Alfeca, can you explain the process of refiling the new bill? And do the last 46 co-sponsors automatically get signed on when it's refiled?
No.
I don't know this. I would appreciate
So
some
that's a
knowledge.
great question, and it's multifaceted. We went through about a 3-month exercise with Senate Legislative Council to get the bill, the House bill, to be completely lined up and consistent with all U.S. law. That was the big exercise. So the bill is ready to go. It's been scrubbed by Leg Council. The only changes that might be made to the bill are to make it bigger if we decide to do that. It could need to go up to 6.1 trillion based on the new ASCE numbers. So there's really, we want our bill to be large enough from the outset to cover all the infrastructure needs so that there's nobody's cramped in style. Then it's just a matter of finding sponsors for the bill. We would probably go back to Congressman Davis in the House. We're shopping around for a sponsor in the Senate. We have some really good leads. And in addition, we've had nonstop meetings since January 1st to try and find some Republicans to come onto this bill. They're still reluctant. They're kind of like reluctant brides. But what we know is that when we talk to them really heart to heart, they know they need infrastructure. They know they need it in their district. They know they need good jobs in their district. And they know, what's coming from the budget, we'll need to have some offsetting policies so that there, won't be blowback on them in their districts. So they know that there's needs for all these things. We just need somebody to kind of jump in the water and take on the bill. And the way we've been selling it is this will bring great jobs and great infrastructure into your district because the bank is large enough to cover everything that's needed across in every single district.
Thank you.
This won't increase the debt and will not increase the deficit. That's the key thing.
Right.
Walt, just hold on 1 second. We need to ask if Jed Davis, do you want to speak again? You want to weigh in at all?
No, I mean, I don't have anything additional to add. I completely agree of bipartisan support. I mean, I'm a member of the Freedom Caucus on the Republican side. So, I mean, I am, some people might have grabbed their hearts when I mentioned that, but I'm a pretty conservative, and I think this is a great, this isn't blue or red. I think my senator or a colleague might have mentioned it. Someone mentioned it, that it's roads are roads and we all drive on them. And we can't rely on government to solve every issue. So if we can have another avenue to solve issues, it's a slam dunk. I don't care if you're red or blue. I'm all in.
I love what you said. I love what you said, Jed. I was told once that I wasn't going to be put on a state committee because I tried to solve problems and they didn't want to solve problems. So, Walt McCrae, you've been waiting very patiently.
Oh, that's I've been twiddling my thumbs over here listening to everybody. Jed, are you're a member of the Freedom Caucus in the U.S. House, right?
Illinois.
Just in Illinois, okay, because there is on the national level a Freedom Caucus, of course, and a member of the Problem Solvers the caucus at the national level is my Congressman Brian Fitzpatrick, with whom we spoke last year about this infrastructure, the NIB. Very, very interested. Spoke with his staff and so forth, but it's just one of those threads I need to pick up. And I'm just thinking about as I'm working in public banking nationally with PBI, facing the same resistance to common sense and self-interest. But I think that there's a level of outreach that we might want to consider how we might approach. Last time on this call, I suggested that we look at bringing in some media talent and resources to be able to expand the conversation. And I think that one of the additional targets we might consider are the supporting organizations. And Jed, I didn't mean to be sticking this with you. I'm just kind of transitioning in there. But let's say the Chamber of Commerce. And of course, business interests and other social groups that are not politically identified or aligned. This is a no-brainer. It's a great story, got lots of great American history, and of course, a very timely one. So I'm just putting out for us to consider, how can this group, how can this movement, how can we, as managers of this, bring in some new voices and new energy that will be able to disseminate the story and tell it more widely, to put the pressure and to be able to provide some grassroots presence for our local representatives to support it in Congress. So that's what I wanted to just put out there, that these groups, if the Chamber of Commerce, for example, could be used by Ronald Reagan to move their industries toward privatization and through changing the tone of American corporations. It seems to me that's a technique or a tactic that we can employ for the National Infrastructure Bank as well, that we shouldn't keep it locked up into a partisan this or that, or even a partisan both. We've got to create this as a national movement. I think that'll do me for now. Thanks.
Well, that's a great point. So I'd like to offer this. Last month, I was at a meeting in Raleigh with the bankers, the Chamber of Commerce and the realtors. And the State Chamber of North Carolina, their president, we spoke at length, and they're interested, to your point, they're interested in infrastructure as Jed would thought they would be. They're totally interested in this idea. And I'm currently talking with NAR. Obviously, I'm president of our association. I'll be incoming, and I've worked with the association for years. They're interested too, because these are not partisan issues. These are just basic issues. So we're trying and we're moving it that way, and we'll keep you posted what happens. But so far, they're interested in hearing about it, and I'm trying to schedule a call to get Alfecca and the team on there to bring them up to speed. And I know if we can get North Carolina interested and then straight to NAR, well, that will open a lot of doors. So I think, do we have any other comments before we pull up some mobilization slides? Anyone else have a question or want to say anything?
Hi, this is
Lucianne. Okay, Lucianne, where are you from?
I am from Waco, Texas.
Okay.
Well, more specifically, people know Waco, but I'm from a small city of Beverly Hills, Texas. We're a population of 2,100 people, and I am a former mayor as well. I'm currently a justice of the peace for McLennan County, and I am sorry, I have a 1.5-year-old. I am so appreciative of all the information that has been shared on this Zoom. And I myself, my city is really small. And funding for small cities, especially in Texas under 50,000, is seriously lacking. And I hear rail and I hear bridges and I hear roads. And I've heard a little bit about grids, but for my city, maintaining roads is such a difficult process because we're landlocked, we can't grow. And I haven't really heard, am I missing any specifics on smaller cities?
No. This would apply to all sizes, and that's why I got interested, because I was a mayor of a county seat, but we were a smaller town in the Triangle area, in Raleigh-Durham area. And I know, and you know, when you try to get money, you can try to get bonds, which are difficult to get. You can try to get a loan. You're going to have the tax base to support it. And in our state, you go to the local government commission and they can go yay or nay. And this is an elegant solution for small towns, for mid-sized towns, for large cities, for counties, by putting the money where it needs to be. The problem that you and I have both seen is that the money hardly ever gets down to the small and mid-sized towns because it's usually locked up further up the stream. And this would allow the ability for everyone to have equal access to the pie. And Alfecca can go much further in it with you on that. If you want to get on another call and have like a 30-minute tutorial, which is what I did, and I learned quite a bit from Alfecca. In fact, I have a radio show I interviewed you. You can listen to that radio show and you'll learn all you need to know, because I ask questions like you would, like a mayor.
Awesome. Thank you.
You are welcome. I just want to let people know, when I use a term like NAR, it means National Association of Realtors. Sometimes we just get into our lingo, but that's what that means. And I do think that we are supposed to bring up mobilization slides, which that would probably, no, yes, I believe so, yes. Because part of what we're trying to do is take action, which is we're going through our process and policy, but ultimately we want to promulgate, we want to get this done. And this is our action page. And we want people to get familiar with this action page. And we want folks to print out the flyer. We want them to distribute it to their elected officials. Make sure that if there are going to be town halls from your congressional member, that they see this, they understand this, so that we can get bipartisan support for a very important idea. And obviously, in order to make this happen, we hope that people can contribute. this is a way you can just quickly take a photo of this with your phone, get on the page, contribute. I haven't told the guys this, but Stu, I will be, I'm committing to contribute and support you guys now that I've been working with you guys since I met you last summer. I will support, I believe in this, and I hope others will find their way to making a contribution as well. So I really appreciate everyone getting on this call. Is there any other comments or anything that anyone else wants to say as we have all these folks here from across the country?
Well, I would just throw in, I had a thought that maybe it would be nice to have Alfecca describe the mechanics of how the money gets distributed
Yes.
to the projects, because the question about, having the shovel ready is one thing, but there's a lot of, behind the scenes development and preparation and connections and so forth. And the design for the NIB incorporates that need.
Alfecca, since we did cut you off earlier and we're coming back to you, and we do have plenty of time. These calls usually end, after we're at 9. We moved right along, but this is probably the mayor and me. We try to move stuff along, but go ahead and bring this up because some people may not even know how it's capitalized and how we plan to start this because we only got a certain way into it, but bring it up and explain.
So, this bank operates just like a commercial bank. That's the beauty of it. It is an off-budget, public, national bank. So it doesn't need any infusions from the federal budget, and it operates over time on its own resources. That's the beauty of it. The other banks that we've had in our nation's past were done similarly. In fact, this first bank that was started by Alexander Hamilton, we used the same method. We've dusted it off. We have actually the articles of incorporation for this bank. And it operates just like a bank. This is how the unique feature of it, though, that it is a little tiny bit different from most commercial banks. A commercial bank, in order to open, it needs to get adequately capitalized. And that's money that the owners of the bank invest in the bank, and it acts kind of like a rainy day fund in case the economy goes bad or some of the loans go bad. And Alexander Hamilton invented this great technique of using the federal debt as a way to capitalize the bank. How did that work? After the Revolutionary War, all the states had a lot of debt as a result of fighting the war. So he collected all this debt from the states and then federalized it into something equivalent to treasuries, into these IOU papers for this debt. And then he used that debt to capitalize the bank. So he did the same thing that we're going to do for our bank, and that is to swap these treasuries. Today, there's about $28 trillion out there held by corporations, other countries, pension funds, lots of, even individuals can own their own treasuries. And so we're asking would a few of those treasury holders like to invest their treasuries into the bank and then receive them swapped for an equivalent of preferred stock in the bank. They'll be non-voting members, but they will be guaranteed a little bit higher dividend on their yield for their preferred stock than they were earning on the treasury. So that's how we capitalize the bank. And that stream of money comes out of interest earning from NIB loans. And then there's plenty of money left over for the bank to meet other operational needs, like paying workers, other things on its books that it needs to do. And that's the reason why it does not need any money from the federal budget to operate over time. It's self-sustaining and off budget, operates on its own finances.
So
Then,
Alfecca, if we could stop there, are there any questions on that? Because usually people want to ask about how it's capitalized and how this works. Are there any questions? If not, I can't see if anyone, if not, keep rolling.
Jim Birch.
All right, Junebird. Okay, Jim.
Does that, Alfecca, as they use those loans or the debt of the federal government, does it decrease the debt?
no, it doesn't change it at all. As I said, there's $28 trillion of our accumulated debt over time that is out there in public hands. And people buy and sell these treasuries all the time. They have special brokerage houses where it's called the secondary market for treasuries, and people are buying and selling these things all the time. They might think today, for example, that the stock market is too iffy, too frothy. And so they want to get out of stocks and they want to get into something more secure. So that they would sell their stocks, they would use that cash, go to the treasury market, the secondary market, and buy treasuries. So that secondary market is churning and trading all of the time. And we would just use that mechanism that's already there and insert our preferred stock as something to swap this. Instead of swapping the treasuries for cash, we would swap them for preferred stock. Did that answer your question?
Does, thank you.
Yeah. Okay, so that's how we capitalize it, but that capital is not used up. It just sits on the bank's books, and then, as I said, it acts like a rainy day fund. Now, this is the second tricky part of understanding how this National Infrastructure Bank works. It gives out a loan that's a different operation altogether. It gives out a loan just the same as any commercial bank. Uses the same accounting software, banking rules. Did you know that banks actually create money when they give out a loan? When you go and get a car loan, that is just, as Ellen said, that's just the bank balancing one side of its books with the other side of its books and creating a new deposit in exchange for the loan. And that adds to the money supply. So it turns out 90% of America's money supply was not created by the Federal Reserve. It was created by banks when they gave out a loan. And this bank is no different, operates just the same, FDIC insured, same banking rules. All the fiduciary things are in place to make sure that the bank stays on track with its loans. So that's how we give out a loan. Then what does the process look like if somebody wants to come in for a loan? Those borrowers would be state and local governments, any public entity, like the small city that Lucy Ann talked about, that she was the mayor of, could come in directly to the NIB and ask for a loan. And it would be a sort of a similar process to, not as complicated as getting a muni bond, but maybe on the same scale as a small business loan, for example. And if a small, now these loans have to be paid back. So that means that they would be paid back out of user fees, or they would be paid back out of higher revenues coming in because of the added growth. Don't forget, then the borrower would go out and hire firms to do all this construction work. They would go out and hire workers. They would buy goods and services to do the work. All of that would build the economy. And now for every dollar that the NIB is lent, it plows back and creates $3 new into the economy, and that brings in new tax receipts to pay back the loans. So it works. But if a city, a small city, is so low income that it really can't even afford a very low cost loan, then it can ask for a grant out of a trust fund that will be created in the bank, within the bank. Any net profits from the bank will go into this trust fund, and we can give out grants in place of loans. So they will come in directly for their infrastructure needs. They get to decide what they want to take a borrowing for. And it could be a group of entities that come in. For example, a water utility could come in with the local road authority, that could come in with a broadband company and fix everything underneath the road, the sewers, all that kind of thing, and then fix the road on top, and everybody would share a little bit of the debt. So spreads the debt around. Or it could be, for example, a high-speed rail authority would take a loan for a high-speed rail project, and that would bring in new economic activity into the area, and that little city would benefit from a loan that somebody else took. So that also adds to the economy. So the secret sauce is big enough to cover everybody's needs. And then this kind of investment really grows the economy, to grow us out of our federal debt problem, but also to improve financing and financial resources at every level.
So Alfecca, you do have information for everyone on the call for each state, how this breaks out, because I've seen this information for North Carolina, for instance.
Yep.
So if people from other states, she can break it out and show you what this would
Right.
mean for Illinois or New Jersey.
Pennsylvania,
Exactly.
Georgia. Maryland. And again, you know, what each state needs. For example, Maryland has got one big traffic jam and they don't have enough affordable housing and they have bad water. So that's the things that the bank would cover. Michigan has potholed roads. New Jersey is, as we said, has the oldest infrastructure in the world. It's very densely populated, needs a lot of infrastructure work. New Hampshire needs a new airport. It doesn't have a very successful one, and tourism is a big part of the state. So if you want to attract those people up there, you need to have a new airport and also to build off-site facilities. Arizona needs water. We have some great plans for souping up, re-liquefying the Colorado River system, which through aqueducts and everything brings water down into Arizona, so they don't have to have a big cutback in their a lot of agriculture and cattle ranching is done all through these areas. If we don't take care of water in places where we grow our food or cattle, we're going to have spiking food prices. So these are all things that'll help eventually every person in the United States.
That was wonderful. We're gonna just stop right there.
Yeah.
We got two quick folks I think that we want to hear from. Nelson, who's had your hand up. You spoke earlier, Nelson Betancourt. So
Yes,
what do
thank you.
say now?
Real quick. Alfeka, are loans considered assets to a bank?
Yeah, that's the beauty of it. If you really would like to read the nitty gritty, I did this for myself because I didn't pay enough attention when I took money in banking graduate school. But I wrote for dummies how the NIB creates and makes money the same as every other bank does, and it's just points on its balance sheet. So yes, for a bank, a loan is an asset. When you go to a bank and you take a loan, that's a debt for you. It's an obligation. But for the bank, it's an asset. And so when we capitalize the bank, people that are holding treasuries, that's an asset for them. They'll swap one asset for another. And that's where it places on the balance sheet.
Thank you. And for Mr. Davis, one last question for Mr. Davis, Mr. Jed Davis. Mr. Davis, do you see any openings in the current Republican Congress for this kind of initiative? Do you see any opening? Or what is your sense of what kind of argument could be made to have Republicans open up or not feel skittish about signing to this bill?
Well, don't exactly put him right on the spot, but
It's a question.
I know.
You know,
it's a good
question.
I think there's good opportunity there. I can definitely get people together here in Illinois, and it's great to hear the senator here in Illinois reference Darren LaHood. He sits in a portion of my rep district, so I chat with him quite a bit. I also have some good ties to the Freedom Caucus out in DC. One of the reps here, his wife is Mary Miller, who's a representative out in Washington. So I've got some good conduits out that way. And I think with the right tools and the right kind of selling conversations, we can definitely bring some people alongside. Their fear is going to be, hey, you're trying to grow something. You're trying to grow a big money ball. And that just raises red flags in the Republican world, because usually we want to make it more private sector and not so centered into a big, somehow federalized pot of cash, because it's going to get misappropriated. But I think we can clearly show the lines not being connected there. So I think it's just more of an education process than anything.
I totally agree with you, Jed. And since this was started, the most recent iteration, by a Republican president, Herbert Hoover, and finished by a Republican president, Eisenhower, in building our highways, I think we have a good argument there, right? That it's been a bipartisan idea. So folks, thank you very much for coming on the call. We're going to urge all of you to get in touch with your congressional members, county and city council, state reps. We need resolutions and policy initiatives to move forward. We can supply and help you with these resolutions. Stuart is amazing at that. Ingrid, I didn't ignore you. If you have one quick thing to say, you raised your hand quickly. Ingrid Clare.
I just wanted to say, really the bank is not going to be attached to government. And it's not, so it's going to be like its own business, but it's not going to be a commercial, like a regular business. In other words, it's going to stay just for the purpose of infrastructure.
Exactly.
And that's why we want it kind of away from the government, because you know how government is with money. Just let it be on its own, then it can make money.
Thank you very much, Ingrid. So,
Randy, can I add to Ingrid's comment about the management and the oversight of the bank is not being political, but that there will be professional bankers. And I think maybe even Alfeca might be able to articulate who would be on the overseen loan-making component of the bank, if you have time for that.
before Alfeca says something there, I would just want to ask if we would put back up the mobilization slides or the slides that people want to give money. And Alfeca, then you can start as we put on the Oscars music and end the call. Alfeca, you can answer that question. Alfeca, you still there? He was asking the question about who would be on the management of the bank.
Right. So let me just show we've that enshrined in the bill is a lot of layers for who will manage the bank and how it will be kept on track to make sure that it stays well managed. And we have a lot of lessons from the previous bank, the Reconstruction Finance Corporation. It was run by a banker from Texas, very conservative guy named Jesse Jones. He was a philanthropist also, but he was flawlessly ethical. And as chairman of the RFC, the RFC grew so large that it was larger than the federal budget, larger than all the banks combined. It had not one hint of scandal. Every time he reported on where they were with bank loans, he said, "We lent this much, we got paid back this much. There's loans outstanding these, and all those projects are on track." And he built really complicated projects like the Tennessee Valley Authority. He electrified all of rural America. He had a project in every single county in the United States within 2 years. So that helped to lift us out of poverty, helped to tool us up to win World War II. The bank's charter requires a board of directors. They're all engineer types, and we have risk officers and other kinds of officers that are typical banking people. It's subject to audits, annual audits, reporting to Congress on where the bank is, where the loans have gone. It's full transparency, FDIC insured. It has an inspector general, and all of these banks typically infrastructure loans are very well paid back. Today's challenge is to make sure that projects are well engineered. We had an urban planner talk about, how you have to do a lot of work to have successful urban planning to build out, a complement of infrastructure projects, keep them on track, on time, on budget. We think that the back office engineers that will be working at the National Infrastructure Bank can help with that. So altogether, past banks, hugely successful. Other banks around the world build complicated projects like high-speed rail, tunneling, going through, the marvel of the subway system in London, for example, just as an example. So all of these loans have proven to work and can be effectively managed. We just have to really, have good folks working in the bank.
Well, thank you, Alfeca.
What it'll end, I just wanted to point out one more thing, that we've had one, for example, one Republican say to us just this morning, well, we don't want Washington telling us what to do, just like we wouldn't tell Washington what to do. But these loan projects will be selected at the local level. This will be things that the local level wants and needs. They will be the ones to steer and decide what loans to take on, and the NIB will help them to formulate them into good projects.
Well, I appreciate that response. There we go. So folks, if you can support our bipartisan campaign, we would appreciate it. I really thank everyone for being on this call. We're going to be doing obviously calls in the future. And if you can, again, get in touch with your your leaders in your community, go to your congressional town halls, print out the forms we put up there. Let's see what we can do to mobilize this and get this done. Thank you very much for participating this evening, and I hope to see you in the future.